Assalamualaikum warahmatullahi wabarakatuh. Semangat pagi, selamat siang, dan salam sejahtera buat kita semua. Terima kasih Bapak Ibu telah bergabung lagi kembali di Apari Podcast, di mana episode hari ini adalah episode yang ke-21 dalam kegiatan Apari Sharing via daring yang dilakukan secara mingguan dan bagian dari rangkaian HUT Apari ke-27 yang dimulai dengan beberapa webinar sebelumnya dan sudah ada yang ke-1 dan ke-2 terakhir di hari Selasa tanggal 15 dengan tema peranan InsurTech dalam mendukung pemulihan ekonomi di masa adaptasi kebiasaan baru. Dan hari ini bersama saya Riki Natapraja selaku Head of External Relations Department di Apari dengan bangga bisa bergabung dengan Bapak Ibu semua dalam episode berikutnya dengan tema Contribution to Support Economic Recovery in the New Normal. Sekali lagi terima kasih Bapak Ibu telah bergabung melalui online dan hari ini kita punya tema yang sangat menarik dan luar biasa karena ini special podcast. Kenapa special? Karena kita akan bergabung dengan 3 narasumber internasional dari 3 negara yang berbeda. Jadi bukan lagi local podcast ya Bapak Ibu, tapi hari ini kita ada narasumber expert dari 3 instansi yang berbeda di 3 negara yang berbeda juga. Dari Melbourne, Australia, dari Singapura, dan juga dari Auckland, New Zealand. Yes, sampai sejauh selatan ke Selandia Baru kita punya narasumber hari ini. Jadi Bapak Ibu sekalian, hari ini kita akan membahas contribution to support economic recovery in the new normal, atau bagaimana kita bisa berkontribusi untuk memulihkan kembali ekonomi Indonesia dalam masa baru yang kita hadapi sekarang. Seperti kita ketahui bersama bahwa pandemi COVID ini belum juga selesai, dan kita pun nggak tahu kapan sampai ditemukannya satu vaksin atau satu antivirus ya yang bisa menyembuhkan ini semua. Dan baru saja beberapa hari yang lalu Gubernur DKI kita menerapkan PSBB kembali. Jadi artinya apa? Ini akan berdampak ke ekonomi, akan berdampak ke beberapa sektor. Namun kita sebagai professionals insurance masih berperan, masih punya peran penting untuk mengembalikan ekonomi dan support pemulihan recovery ekonomi. Oleh karena itu, hari ini kita akan membahas dan melihat dan sekaligus mendengarkan pandangan, ekspertis, dan juga keahlian dari 3 sumber. Yang pertama dari ANZIF, yang akan memberikan paparan tentang bagaimana pendidikan dan peningkatan kualitas SDM atau human resources kita dan dikolaborasikan dengan InsurTech atau teknologi yang memadai dapat memberikan kontribusi kepada era new normal ini untuk tujuan meningkatkan kepercayaan kepada konsumen dan juga kepada market. Ada pembicara dari Lloyds yang mana akan menyampaikan bagaimana market Lloyds hari ini sudah melakukan yang terbaik dan terus akan melakukan yang terbaik untuk memulihkan market appetite atau risk akseptasi dan apalagi menjadi inovasi di sisi Lloyds untuk mendukung marketplace insurance. Dan juga akan dibahas oleh DXC Technology tentang bagaimana digital transformasi sudah mulai dipercepat. Seperti Bapak Ibu ketahui juga di antara kita, oleh karena ada COVID ini, penggunaan teknologi, penggunaan digital sistem dipercepat dan harus dipercepat. Kalau tidak, kita akan kehilangan kontak atau hubungan dengan nasabah maupun market insurance dan rekanan kita lainnya. Hari ini kita dapat suatu kehormatan dengan ada narasumber yang saya akan bacakan profilnya. Yang pertama, Mrs. Prue Wilsford, sebagai Chief Executive Officer ANZIIF, the Australian and New Zealand Institute of Insurance and Finance. She has been appointed Chief Executive Officer since 2013, with more than 30 years of experience in financial services, business and education. Prue joined ANZIIF after 10 years as the General Manager of Corporate Operations with State Trustees, and she is currently a Director at Citywide Services Solutions and a member of the InsurTech Australia Advisory Group. Up until her appointment at ANZIIF, she served as Deputy Chancellor of Victoria University. Since her appointment as ANZIIF CEO, Prue has led the transformation of the organisation through introduction of ANZIIF professional standard qualifications. She has strengthened relationships with industry, entering into partnerships that extend through Asia Pacific and recently into Europe. And one of the important achievements between APARI and ANZIIF is that APARI is the first insurance institution to have a MRA, or Mutual Recognition Agreement, in place, where we recognize, or we have been recognized by ANZIIF with our syllabus and training programs to be aligned with certain levels of membership qualifications at ANZIIF. So this is a fantastic and remarkable achievement, and this was achieved back in 2017. Not only that, APARI was the first delegation from Indonesia to ever visit the head office of ANZIIF in Melbourne last year. So thank you, Prue, and to everybody in Melbourne, Australia, for welcoming us last year. It was a great learning experience, and so much knowledge and friendships were established. And hopefully, once COVID is over, we may go back to Melbourne again and see you all and bring another delegation of interested participants and students. One of our other speakers today is Mr. Pavlos Beropoulos. He is the Country Manager of Lloyd's Singapore and Chief Executive Officer of Lloyd's Asia. Pavlos joined Lloyd's in 2008 in London, where he was responsible for overseeing regulatory activities undertaken in Lloyd's International Office Network and coordinating Lloyd's interaction with senior regulatory and government officials. In 2014, Pavlos relocated to Singapore, assuming the responsibility for Lloyd's Asia's market development function and a number of strategic initiatives in Asia Pacific. In 2019, Pavlos was appointed Head of Market Development for Lloyd's in Asia Pacific and was responsible for developing Lloyd's presence and strategy in the Asia Pacific region. In 2020, he was appointed Country Manager of Singapore and CEO of Lloyd's Asia, and is a member of the Executive Committee of the Singapore Reinsurers Association. Pavlos has a master's degree in International Relations and English from the University of St Andrews and holds the Advanced Diploma in Insurance ACII qualifications from the Chartered Insurance Institute. Another achievement also for APARI was in 2018, we visited Lloyd's of London, the first delegation from APARI ever, or from even Indonesia for that matter, to visit Lloyd's, and we thank Pavlos very much for coordinating that visit and for hooking us up with your Lloyd's of London colleagues in the UK. And it was a fantastic experience, and I'm sure that most that left London wanted to go back to London very soon. Now let's hope that COVID can quickly pass over and we can all meet up again in London very soon. So stay tuned and stay active with APARI. Thank you, Pavlos, for that. And our third speaker today is Mr. Ken Chaplin, the Global Head of Reinsurance and Specialty Sales for DXC Technology. Kent is an international reinsurance executive specializing in reinsurance and specialty insurance with 25 years of experience in insurance executive management, risk and government, regulations, underwriting oversight, claims and legal management, business development, operations and process reform and strategy. In his most recent role, he led regional operations for Lloyd's of London across Asia Pacific, where as CEO he was responsible for the effective management and oversight of all Lloyd's operations across Australia, New Zealand, Japan, Malaysia, Korea, Hong Kong and Singapore. So there you have it, Bapak Ibu sekalian, our panel of experts today, fantastic international esteemed colleagues of APARI, and we hope that you will enjoy today's session. And so now, without further ado, I'd like to hand over to our first speaker, Prue Wilsford. It's over to you, Prue. Thank you.
Selamat Datang, thank you so much for having us here today at the APARI 27th birthday. It is wonderful to have such a great partnership, and I look forward to speaking to you today about how we can build trust in the new normal post-COVID and how important that is for the economic recovery. So firstly, for those of you who do not know ANZIIF, as Ricky has said, is the Australian and New Zealand Institute of Insurance and Finance. We are the largest and oldest professional association for insurance in the world, and we have over 18,000 members, predominantly across the Asia Pacific region. Our focus is on building professionalism in insurance. And in that context, we're very honoured to partner with APARI, who also have a great focus on building professionalism in insurance. As Ricky outlined, since 2017, we've had a mutual recognition agreement in place which supports APARI members receiving an international designation through ANZIIF. And it's been a very rewarding and, may I say, enjoyable partnership between the two organisations. So I would like to talk today about the importance of building trust. As our economy opens up post-COVID, the role of insurance will never has been as important as it will be then. When you think of Lloyd's, its mission is to create a braver world. And bravery is all about risk-taking. And insurance is an essential part of people feeling confident in being able to take those risks and help our economies grow again. But we all know that there have been real challenges to the trust equation, particularly in financial services, but also in insurance. A recent Deloitte report said that 1 in 3 customers believe that financial services can be truly trusted. And this is an issue for us if we really want to grow our economy. So I'd like to talk today about a model that I like, the Rachel Botsman Who Can You Trust model, which talks about how we can focus on rebuilding trust. But firstly, why does it matter? Why is trust important? Well, if there is trust between consumers and the insurance industry, it will improve cooperation, it will improve disclosure, and that means that consumers can engage more, they can buy more relevant products, the right product, rather than just purchasing on price. It also matters because our employee value proposition is improved when we are a trusted industry. And for the industry, it's important that we are trusted because overall, this grows the entire insurance industry and importantly, it supports innovation. So trust is really, truly important for us to grow. But you often hear people talking about building trust and the importance of building consumer trust. But in this model, we would say that actually consumer trust is an outcome. But what we can do as an industry is focus on being trustworthy. And if we are trustworthy and consistent in being trustworthy, then in fact, consumer trust will grow as an outcome of building that trust. So what does that mean? Well, in this model of building trust, there are 2 areas that are really important, two main domains. The first is about capability, and the second is about character. So capability has 2 main elements. The first is competence. Do you have the skills, knowledge, and resources to consistently deliver the experience that your customers expect? Secondly, is reliability. And this is about timeliness and consistency. So these 2 areas, competence and reliability, can come together to actually be is your organisation capable of serving the customers that you are intending to serve? The second area of trustworthiness is about character. Firstly, it's about integrity. Do you have the best interests of customers at heart? And is there an alignment of interest and good disclosure when there is not alignment? And the second element is around benevolence. And this is really about your empathy. Do you understand your customers' needs? So this is quite a useful model for thinking about how you are running your business and the customers that you serve. It gives you an opportunity to stand back and think about those four domains: competence, reliability, integrity, and benevolence, and to actually do a bit of an audit on your current business. So if you stand back and think about the target customers that you are serving, do you have the skills and knowledge, the timeliness and consistency, the alignment of interests, and the understanding of their needs in order to be a trustworthy provider? We think that this is incredibly important because if our industry is trusted, we will be able to help the economy regrow. So this is, I think, an important model, and I hope that you find this model useful in the businesses that you run. Secondly, I'd like to talk about the kind of skills that we think are important in the 21st century. And it doesn't matter what industry you work in. I think this model is very important. Firstly, you must be a professional. You must have a domain of knowledge where you are an expert. So the first question is, well, what is a professional? Well, there's been 2,000 years of research, and it always comes up with basically the same answer. Firstly, you must be certified to a body of knowledge. Secondly, you must be committed to lifelong learning through continuous professional development. And thirdly, you must be committed to a code of ethics. Members of APARI and members of ANZIIF demonstrate all of the elements of being a professional within insurance. These days, our consumers expect us to be professional. And so that domain of knowledge must be relevant whether you are in broking, reinsurance, or as an insurer, you must be able to demonstrate that professionalism. These days, that's a baseline given. But to really succeed in the 21st century, I think there are 4 really important skills that everyone must build. Firstly is critical thinking. Can you analyse a problem? Can you listen to your clients and understand their needs and really make sure that you solve their problems? Communication. Being able to communicate those solutions to clients effectively and in ways that they understand is a key skill in the 21st century. The ability to collaborate has never been more important because problem solving these days involves many domains of knowledge. And so to be able to collaborate across the insurance value chain and bring innovative products and innovative solutions to new risks that are emerging is an important skill that we must all build. And finally, the important skill of creativity. So creativity is about imagining new futures, about co-creating solutions, about finding creative solutions to new problems. And so these 4 skills, I think, are fundamental to our new world: critical thinking, communication, collaboration, and creativity. And so if you can call yourself a professional and you can build these skills for the 21st century, we think that you will be very, very successful. The new world will present significant new challenges. And for the insurance sector, it is really important that we are trusted and that we bring professional skills to our communities so that they may grow. Again, I refer to Lloyd's mission of bravery, and I encourage each of you to be brave in your professional practice and encourage your clients to be brave in taking risks so that our economy may grow again. So again, I would like to thank APARI for the opportunity to speak with you today and to talk about the kinds of skills that we're going to need in our new normal. And I wish every one of you good health and happiness. I hope that you are safe and well, and that so are your families and friends. So to Bambang Suseno, to Ricky and all the team at APARI, Selamat Ulang Tahun. Happy birthday for 27 years, and thank you so much for having us here today.
Thank you very much, Prue. Thank you for your insights and your views on how professional development and education can help further enhance the level of trust and engagement with clients, customers, and the market. And definitely this is something that we'll all need to pay attention to moving forward, as all professionals need to be aware of all those points that you've mentioned, especially with the 21st century skills. Before I introduce the next presenter, buat Bapak Ibu, para peserta yang sedang mengikuti acara ini, nanti tanya jawab sesi akan dibuka di akhir setelah 3 pembicara sudah selesai memaparkan presentasinya. Boleh disampaikan lewat chat room di WhatsApp group. Silakan boleh pakai bahasa Inggris atau bahasa Indonesia juga boleh. Mohon dibantu ditujukan pertanyaan ke siapa. Misalkan ke Prue, ke Pavlos, atau ke Kent. Nanti kalau dalam bahasa Indonesia saya akan berusaha menerjemahkan ke bahasa Inggris dan sebaliknya. Oke, selanjutnya Bapak Ibu kita akan menyaksikan presentasi dari Mr. Pavlos Spiropoulos yang sebagai Country Manager Lloyd's Singapore dan Chief Executive Officer Lloyd's Asia. To Pavlos, the show is yours.
Thank you very much, Ricky, and thank you very much to all of APARI for giving us the opportunity to be here today. Lloyd's loves its relationship with APARI. We've really enjoyed the collaboration over the years. You know, Kent and I actually together, I think, joined you for the first time in Jakarta a few years ago when we held the Lloyd's Day in Jakarta, and ever since then the relationship has continued to develop and blossom, and we really look forward to continue working closely with APARI today. So happy birthday on the occasion of your anniversary, and I hope this is the first of many continued interactions into the future. So today I would like to focus on highlights of a white paper Lloyd's recently published on the global insurance industry's response to supporting global recovery and resilience for customers and economies. The paper was produced collaboratively with leading insurance industry players and proposes frameworks that offer solutions to assisting customers and economies to protect themselves during this pandemic and against future systemic risks. So the magnitude of the pandemic's financial and social impacts has exposed the shortcomings of society's preparedness for and resilience to systemic risks of this scale and nature, including the ability of some risk transfer products and structures provide protection. Systemic risks, such as pandemics that cause large economic and societal losses, are unlikely to be covered in their entirety by the global insurance industry, as the total economic loss would exceed its financial resources. Where cover is available, premiums can be significant for what many customers have previously regarded as remote threats. This means the insurance industry must develop new products and structures in those areas where protection gaps exist today to support business recovery over the short term post-lockdown and provide greater resilience over the medium and long term. Lloyd's interviewed executives and experts across key global industries to identify exactly what customers' priorities are. The results were as follows. In the short term, customers want to ensure their business's resilience to a second wave of the pandemic. They want to safeguard their employees as they return to work. They want to provide a safe environment for customers as their businesses reopen, and they want to provide clarity of insurance cover. In the medium term, our clients want more flexible insurance cover for a more volatile business environment. They want to understand ways that resilience can be increased for their global supply chains. And they want in-depth assessment and protection from cyber risk exposures. Protection from digital economy liabilities was another area that was brought to our attention as people became more aware of the risk of intangibles. Finally, over the long term, our customers asked us to think of ways that we can find to prevent risk and provide mitigation against these risks. And they want advice on preparing for the next systemic risk. So insurance brokers should focus their development work in these areas to protect customers as they restart their businesses and start operating again, and strengthen society's overall resilience more broadly. Much of this work can be carried out by the global insurance industry itself, working collaboratively to design and develop new products, services, and structures. However, to overcome the challenges of offering protection for systemic risks at scale, it must also work with governments to combine the insurance and reinsurance industry's capital with capital markets resource and sovereign funds to provide the necessary security and capacity to pay claims. For some of these short-term risks, most businesses should be able to obtain the core commercial insurances that protect their employees and customers. So you think of classes of business such as public liability, employers' liability, workers' compensation, and professional indemnity. And as they start their operations, we should be able to provide that, provided they can demonstrate that they're following government guidelines and social distancing and PPE usage. For other risks, though, this will be more challenging. Most businesses operated without cover for non-damage business interruption for communicable disease prior to COVID-19, but the demand for cover that includes protection against a second wave of the pandemic will now be significant. In some countries, the threat of a second wave could make new COVID-19 business interruption cover unaffordable for customers, many of whom are already struggling from the effects of the current lockdown, or loss-making for insurers, many of whom are already heavily exposed to COVID-19 losses. So these will require new solutions because cover does not currently exist. And Lloyds has come up with one potential solution called Restart. So Restart is a potential new insurance solution the Lloyds market is currently developing with industry partners. It could offer business coverage for future waves of COVID-19 by pooling capacity from several Lloyds market participants. It would initially be aimed at smaller businesses, potentially expanding across a range of small to medium enterprises and mid-market over a period of time. It will be subject to the usual Lloyds performance management requirements and competition law considerations, but its benefits could include building resilience for a key sector of the economy and supporting the recovery from COVID-19, providing certainty of business interruption coverage for a second wave of COVID-19 to customers where few alternatives are currently available. It would contribute directly to customers and their recovery from COVID-19, helping strengthen customer relationships over time. And it could potentially be applied outside the Lloyds market through the involvement of wider London market and global reinsurers. It would help manage affordability and insurers' exposure through risk pooling, variable limits, and industry or geographical diversification. As society recovers from the impacts of COVID-19, it must do so in a way that makes it more resilient to the next systemic risk. Systemic risks are challenging to predict and model, and are so large in scale that they render traditional risk mitigation and transfer methods unfeasible, requiring financial resources far in excess of the global non-life reinsurance industry's $2 trillion asset pool. As the pandemic has shown, when a systemic event does occur, given the limited commercial cover, governments have to step in to protect their citizens. This has been effective so far, whether through business loans, assorted backstops, or economic stimulus. And these remain a viable means of continuing to protect society from systemic risks. However, this approach does not change society's understanding of systemic risks or incentivize behavioral changes that help mitigate their impact. And it means taxpayers and future generations end up paying the cost. Although the global insurance industry does not have this capacity to absorb systemic catastrophic events, otherwise known as black swan events, on its own, it can help develop national or regional structures that could provide this protection. So Lloyds is proposing 2 national or regional frameworks that, if taken forward, could provide governments around the world with risk transfer models they could put in place immediately, in partnership with the insurance industry. Lloyds has published these open source frameworks to provide a blueprint for government and insurance industry partnerships that strengthen societal resilience in the face of black swan events. The first government and industry open source framework is called Recover Re. It's an after-the-event insurance product framework, which could provide immediate relief and cover for non-damage business interruption, including the current COVID-19 pandemic and over the long term. If implemented, this could be an efficient way to inject commercial and government funds into the economy, providing relief to customers with limited borrowing capacity. This framework could be implemented in any country where government has the resources and industry commitment to support it. The benefits for our customers would be that they would be able to access an immediate cash injection and recovery support paid for over the long term. Non-damage business interruption coverage for future waves of COVID-19 pandemic, should disruption continue past a specified time period or losses exceed a specified excess, could also be provided. And also non-damage business interruption cover for future pandemics and possibly other systemic events. The second framework, Black Swan Re, is a reinsurance framework for government and insurance industry partnership, which could enable insurers to provide non-damage business interruption cover that offers customers more protection from the devastating and long-term impacts of systemic catastrophic events. If implemented, this structure should enable industry pooled capital to provide reinsurance for the impacts of future Black Swan events, backed by a government guarantee should the pooled assets become exhausted. The design of this structure includes the requirement for an initial commercial and industry pooled layer of funds, enabling faster payouts to customers, as well as a buffer for governments before they need to step in. Benefits for customers under this model would be that non-damage business interruption cover for a Black Swan event could be provided, and they'd have certainty of cover and a quick payout. This model could cover secondary impacts of future events, such as supply chain disruption or the ability to access lending to help the cost of relaunching a business following a Black Swan event-related interruption. And the two structures could be used in combination. Recovery could offer immediate positive impacts to a targeted portion of SMEs, while Black Swan Re could offer protection against the next crisis to a wider set of businesses, creating greater resilience to future pandemic risks, or indeed future systemic risks more broadly. So in terms of what Lloyds is specifically doing, for its part, it will provide seed funding of up to £15 million. That's roughly around 20-25 million US dollars to support this process, and use its marketplace to act as a convener and incubator to help develop some of these initiatives. Lloyds will co-design and pilot initiatives in the London market and across the UK with the support of advisory committee members, before looking to expand this approach globally. And indeed, we are talking to a number of governments and regulators in the world about this. Specific actions also include facilitating the launch of new solutions from the Lloyds market to support business recovery following the current pandemic, including business interruption coverage for future waves of COVID-19 and effective cover for supply chains for vaccine distribution to developing economies. Working with the Lloyds Product Innovation Facility, which is a group of underwriters who come together to focus specifically on underwriting new and innovative coverages. And through a series of sprints, we want to accelerate product development to meet customers' changing needs better following COVID-19. And we're also piloting initial components of a Centre of Excellence for Systemic Risks, including working with the Chartered Insurance Institute, the Lloyds Market Association, and other industry bodies to launch training and education programs to develop the skills and capabilities that we will need to protect customers better against systemic risk going forward. So before I close on my part of the session, I just wanted to share with you some specific examples where we've seen progress in recent months in the insurtech space, where Lloyds is facilitating innovation to help respond to this and future pandemic risks. The first one I want to start with on this slide is Parcel, and that's Parcel is a company that was incubated in the Lloyds Lab. The Lloyds Lab is an innovation lab where we invite insurtech companies or others who want to pioneer in new areas of insurance to come and test their ideas and develop them in a test bed space where they get a lot of support from the Lloyds market. Parcel came into Lloyds and went through that experience, and through that process, they have now launched their own syndicate at Lloyds, which will be focused on providing coverage for cargo, and specifically COVID-19 vaccine cargo as it is distributed to emerging economies. So effectively, we'll be providing insurance to help distribute COVID-19 vaccines to emerging economies once the COVID-19 vaccine has been developed. Another insurtech company that's working in the Lloyds Lab currently is Metabiota, which is a startup focused on quantifying and mitigating epidemic and pandemic risk. And it's drawing on rigorous epidemiological analysis and a wide range of analytic tools to advance the science of modeling infectious disease outbreaks and estimating their socioeconomic effects. So this is helping us look at what's going to happen next in terms of pandemic risk post-COVID-19. And then finally, Thimble, which is a business insurance startup that provides monthly and on-demand policies. And they're developing a low-limit first line of defense parametric contingent business interruption product to protect small businesses from COVID-19 and future pandemics. So with that, I'd like to encourage all of you to share your feedback on these ideas on this paper. You can find the full paper in much greater detail on lloyds.com, our website, or you can reach out to me and I can provide you with further information directly. Where desirable, please do provide support for these initiatives and actions. And also it'd be fantastic to see whether these ideas could be implemented or considered in Indonesia. So if there is appetite, you think, in Indonesia to see if we can launch some of these initiatives there, we would really be delighted to speak with you and your government. So with that, once again, congratulations to Parry. Thank you very much for kindly hosting me here today, and I wish you all the best. Thank you.
Thank you, Pavlos, for your presentation. And it's great to hear and see that Lloyds is always continuing to develop a center of excellence and product innovation. We just saw Restart, Recovery, and Black Swanry, and also explanation of the Lloyds Lab. So it's fantastic to see that, and this is definitely going to support economic recovery throughout the region, if not the world. And moreover, in Asia, in Indonesia here, this is interest for all our reinsurance brokers to keep a tab of what's happening in the markets, especially through Lloyds Asia. Oke, Bapak Ibu, sebelum kita masuk ke pembicara yang terakhir, saya menyampaikan dulu pesan sponsor kita hari ini dari kopi Public Hood yang Bapak Ibu bisa lihat di tengah-tengah meja saya. Ada kopi courtesy dari Public Hood Coffee. Thank you to Bu Ita Gayatri. Dan silakan viewers yang nonton hari ini bisa lihat Instagramnya @publichoodcoffee. Jamin enak, maknyus, dan segar. Jangan lupa @publichood di Instagram ya. Terima kasih Bu Ita Gayatri atas sponsorshipnya kepada APARI. Oke, selanjutnya Bapak Ibu, our next speaker is Mr. Ken Chaplin, Global Head of Reinsurance and Specialty Sales of DXC Technologies. Nah, Bapak Ibu tadi udah dengar dari dua pembicara sebelumnya, ada dari sudut pandang pendidikan atau dari ANZIF yang memberikan guidance atau arahan tentang bagaimana terbaik untuk merancang peningkatan capability, meningkatkan quality, skills, kompetensi kepada insurance professionals. Kita juga dengar barusan tentang market di Lloyds, insurance market terbesar sedunia, yang dimana semua syndicates ada di Lloyds. Dan sekarang kita akan mendengarkan bagaimana kita gabungkan ini semuanya dengan penerapan digital transformation. Karena kedepannya sepertinya kita tidak akan bisa lepas dari teknologi untuk mempercepat perkembangan, untuk mempercepat proses, dan mempercepat efisiensi kepada customer kita dengan solusi yang semakin inovatif. Dengan demikian saya akan memberikan waktu Mr. Ken Chaplin, the screen is now yours. Dimute. Ken, could you open your mic? I think you're still on mute.
Okay. Better?
Yeah.
Probably sounded really good for a minute, huh? Thank you, Ricky. Yeah, thank you very much, Chairman Bam Bang and the APARI board for inviting me here today. It's a real pleasure. And like the other speakers, massive congratulations for your 27th, very young birthday anniversary. And it's exciting to be here and to be here again speaking to you. So my focus today is very much on the future of insurance in a digital world, and how, frankly, a well-executed transformation is going to build a more resilient and relevant insurance industry. So for several years now, and this is nothing new, but for several years now, the insurance industry has been undergoing a dramatic transformation driven by a number of factors. This is pre-COVID. Heightened consumer expectations, unprecedented competitive pressures, the need to automate and optimize process, and the surge in unprecedented costly natural disasters. And of course, now we've had COVID-19, which has not only had an unequivocal impact on our lives and the insurance industry, but it's also had an unequivocal acceleration of the digital world. And I think the perfect example of this is the end of April this year, literally 2 or 3 months after COVID forced itself on the world. At the quarterly earnings report, the new CEO of Microsoft said that within one day they had 200 million Microsoft Teams meetings in a single day. So Microsoft CEO said that's 2 years worth of digital transformation in 2 months. And that's because of the result of COVID. Everyone now is more familiar with remote working, remote learning, customer service electronically, to critical cloud and infrastructure and security. We've seen a prevalence and a huge preponderance of cyber risk increasing as well. So this should resonate with you all. I know you're all working from home. You're all used to work staring at a laptop all day. You know, this is the future, and we must embrace it. So these challenges are formidable, frankly. They're formidable on the industry. They're formidable to our lives, but I think there are also opportunities. There's always opportunities with this challenge. Look at the insurance sector, North America alone, the life insurance coverage gap is to the amount of $200,000 US per family per year. That's a if you look at the US, that's a $12 trillion market gap, or you could say market opportunity. In terms of nearly 2/3 of the world's property and casualty around. So that's a tremendous opportunity for insurers to respond, not only to increase revenues and increase their penetration rates, but also to protect communities and help prepare for the new world. According to McKinsey, just to take a different angle, according to McKinsey, the best performing 20% of insurers globally capture 100% of the industry's total economic profit. And that's accepting the cost of capital. So what that means is the other 80% of insurers globally are struggling to make profit. So again, a huge opportunity to embrace that gap, and to move forward. So how do all these insurers do so well? How do they continually increase their revenue and make profit? And how do they gain market share? Well, I'm not going to try and solve that all for you today, but certainly digital transformation is key to that, and it's key if you want to succeed in the future. So let me just start. I think the best place to start in any digital transformation is with a customer. Yeah, start at the beginning. Insurance is no longer business as usual. The insurance we knew in the past is gone. Forget about it. It's time to move on. It's about a personalized experience. Consumers are very much in the driving seat. It's not insurers in the driving seat anymore. It's the customers in the driving seat. So they used to doing their banking online. They used to shopping online or banking with a smartphone. And they demand that same sort of personalized experience with you as an insurer or as a broker or as a reinsurer. They want a digital omni-channel experience. It's as simple as that. And it's time that we caught up. DXC did a survey this year. We surveyed more than 2,000 consumers in the US. And the findings backed this up. So 55% of US consumers are willing to use technology in return for better services. And 66% of US consumers are willing to use tech in exchange for lower insurance premiums. So from where I stand, I think that's a very clear message. It's a clear direction for our strategies. But for us to respond to this, we have a dual challenge from a digital perspective. And I know you're all thinking this, and that is, we're faced with the agenda is, how do I tackle my legacy? How do I deal with my old data, my old system, my old processes? How do I deal with that at the same time as build something brand new, something shiny, something digital, something that meets the customer experience? So, do I do that together? Do I do it as a whole? Do I do it in phases? And I'm now going to spend the rest of this presentation talking through, my suggestions on how you can do this. Just before doing that, I think it's really important as well. It's not just about the consumer. Yeah, the challenges facing the industry are coming from all directions. They're coming from every single touch point for the insurance industry. So the value chain, if we look at the value chain in insurance, it's about risk, but the underwriting piece of the value chain is simply about distribution, manufacturing, and the capital to support it. Now that hasn't changed. That is enshrined. That is the value chain of insurance. But what has changed is all the parties that play in that space, there's been a massive blurring of their roles. All those roles are changing. New players are entering, such as insurtechs. Risks are changing, climate change, now pandemics. This is the decade of the self-driving car. That's going to create a whole new range of risk. And of course, consumer expectation is changing. They want everything now, and they want to deal with it. They want to be explained. They want their insurance explained quickly and simply. And the competition and economic pressure has also changed the demarcation amongst brokers, insurers, and reinsurers, and capital providers. Brokers are continuing to consolidate, gaining greater market power. De facto risk managers taking on greater underwriting responsibility, particularly when it comes to large and complex risks. At the same time, insurers are trying to become more relevant to policyholders, reaching out direct through customer engagement. And also, insurers are competing with brokers to be a trusted advisor and to be a risk manager. Now, this is creating a real tug and war between insurers and brokers, and I don't think it's over yet. Similarly, insurers and reinsurers, the boundaries are blurring. They're at odds as well. We're now seeing insurers in some areas, such as life and indemnity, ceding less business to reinsurers and retaining more. We're also seeing more competitive pressure on reinsurers to grow, so they're entering the primary insurance market, and we're seeing that particularly in agriculture and in cyber. In fact, if you look at the 8 of the largest global reinsurers, most of them now are providing primary insurance as well as reinsurance. And if you look at Munich Re, a third of their business is now primary insurance. And this is set to stay. So we've also seen a significant increase in capital coming close. The fluidity between capital and risk is becoming shorter, and we're seeing alternative capital markets play a much bigger role in insurance and reinsurance. It's now 15% of a $600 billion reinsurance industry. And we're seeing insurers starting to partner with insurtechs, such as Markel's purchase of Nephila 2 years ago, which was a $12 billion ILS fund in Bermuda. Insurtechs are now playing across the value chain. They are increasing rapidly, and they're not threatening, they're challenging the roles of existing traditional players. And the smart money and the smart players are partnering with insurtechs. Brokers want to own the customer relationship, and insurtechs play a role to help them cross-analyze the customer and cross-analyze the insurer's offering, helping the customer maximize their investment. Some insurers are looking to disintermediate, we know that, either using insurtechs or going direct to consumer, using very similar technologies as we've seen with Lemonade. But insurtechs are also getting into the manufacturing space, and we've been working at DXC with a company called Mapsite, which provides geospatial and locational data analysis. So these trends will continue. They more and more has been invested in insurtechs, more and more has been invested from the capital markets. So these are set to continue, and they will muddy the waters. Yeah, they will provide challenge. I don't think they'll disrupt. They will provide advantage for those who partner and those who work with these people. So they're here to stay. Not only is the whole industry and the value propositions changed and emerged thanks to technology, but also competitive pressure, but the way we transact insurance business is changing phenomenally, not iteratively, but phenomenally. So insurance, from an insurer's perspective, was very much sold inside out from the beginning. What I mean by that is it was sold product by product in-house. It was fairly manual, and it was sold to the consumer. The way the industry is changing now is it's turned on its head, and insurance is bought outside in. So now it's the consumer who's driving the decision. And a lot of that comes down to the digital mandate. It comes down to the growth of new entrants, but it also comes down to the fact that the old world, data was simply captured by an insurer. It was captured, it was stored, and it wasn't used that well. But data now is driving the whole process. And now data is much richer, and it's much more insightful because of data analytics. And leveraging that data for pricing, for forecasting, for modeling, for paying claims more quickly is absolutely critical in your digital transformation strategy. And I think the the final point on this slide to make is, and it's really important as we look to the future, is that we're now working in an ecosystem. We are living in an ecosystem-based economy, and insurance is also becoming an ecosystem. And those insurers that are capitalizing on that ecosystem framework are those that are succeeding. If you look at the combination of Alibaba, Tencent, and Ping An came together to form ZhongAn, which was the first digital property insurer in China. That's the classic, that is a really good example of how these ecosystems work, where you can have insurtechs, innovative products and services, and new business models to coexist on one platform. And that's all been able to happen thanks to the digital transformation. So let's have a look at digital transformation then. I promised I'd give you the answer. Well, I'm now going to try and talk you through how you make a digital transformation work. So before doing so, technology has changed massively at the same time as the industry. In fact, you could argue its pace has been much more quick, and COVID has augmented that. So initially or originally, IT systems were simply an electronic version of a document, right? They were a record. They were just used for record keeping. They were an automation of manual ledgers essentially within an enterprise. So relatively perfunctory, but they did the job. They then evolved into more front-end systems with capabilities to capture the data from external stakeholders, but still not all that conversational or iterative. Today, IT systems are much more conversational, which means they're not only picking up the transactional aspects of the business, but they're picking up all the glue in between and the whole way we trade in this ecosystem. The IT systems of the future will be cognitive, which means they'll be doing the thinking for us. They will be all based on AI and next-gen technology, who will create the outcomes and create the better business decisions for us. In the meantime, we're still stuck somewhere between the core systems and the conversational. So we've still got a wee way to go. But in other industries, we've seen much greater advancement. So anyway, in this environment, we need to transform to a digital platform. It'll allow us to deliver new business models, new revenue streams. As you grow, as you enter new markets and new products, you need to be able to do that digitally. It'll enhance customer loyalty and improve productivity. You can automate, take out manual processing. And all this will be driven by intelligence and automation to drive cost savings and performance improvements. But before I go through this slide, digital transformation is just as much about culture change. And Prue talked about it wonderfully just before, about trust and about training and learning and development. And digital transformation is as much about that as about anything else. It's as much about that as about the tech, right? It's not all about shiny tech. It's about cultural change. And it's about the way we experiment collaboratively with new ideas. It's about the pace of change. It's about how we outdo our competitors and are constantly looking for ways to do things better. And that's a top-down, bottom-up process. So now that all sounds very easy to do. So I think the most important point, and if you take nothing away from my diatribe today, I think one of the most important things is to succeed in digital transformation, you need to combine both the new and your mainstream IT. So tackle the legacy while building the new at the same time. If you try and you can do one without the other, there's a good chance that your transformation will fail. So many of our clients are attempting digital transformations, but at the same time, they're modernizing their IT. And it's the integration or the glue between those two which is key. So IT modernization, you can upgrade your policy administration system. You can create more efficiency. You can introduce automation. You can put it on the web. There's all sorts of ways to modernize your mainstream IT. But at the same time, you really want to be looking at digitally transforming your entire end-to-end business, but based on business outcomes. And that way, much more consultative and conversational. So why do these fail? Why does this glue not work? Well, there's a lot of reasons why they fail: risk and cost, failure to engage, failure to invest properly. But often, and this is really important right now as we enter at pace this new world, is often organizations rush to modernize their IT infrastructure without fully understanding the implications of digitally transforming their business. And that's critical. So without really weighing up the risks and the risks of proceeding at pace. So to give you an example, a customer holds the reins to your business. The customer's satisfaction holds the key. And customers are fickle. We know that. Customers will move. And customers are loyal if you provide a good service and a good product. So one bad online experience or one bad manual experience can be critical. That can be worse than a security breach. So it's really important that as you enter these transformations, you really understand the outcomes you're trying to achieve and the pace of that change. So if you can marry digital transformation with your mainstream IT, you are 3 times more likely to succeed in your digital transformation. Of course, there's many, many ways to transform, lots of different ways. And I'm not going to talk you through them all, thankfully. But there's one fail-safe method, and that is it's best done gradually but sustainably. I'll give you a very quick example before I close, just on making this perhaps a bit more real to you and a bit more practical, because it's all very well academically. But one of our customers, a major Belgian insurer, was really looking to drive a much better customer experience, and in particular was looking to really improve their broker experience. You'll be pleased to hear. So they wanted to increase revenues quite significantly. They wanted to minimize claims as well as reduce cost, remain competitive, but also, as I said, really personalize that experience. So we put in place an end-to-end digital platform for them, and across all of the channels coming into their business. So we rebuilt their workflow and systems integration, which is fairly core. That side of the business was core, but we also put in place a front-end omni-channel, which allowed them to trade directly with all of their customers in whatever the way their customer wanted. So it wasn't prescriptive, it wasn't inside out, it was outside in. And also an ecosystem platform, which allowed this insurer to trade with any third party on that same platform. So you don't need to go to other platforms to get things done. And the results speak for themselves. 50% growth in issued business for this client, so hugely successful, and a reduction in their operational cost. So in closing, I want to talk really about the fact that it is that transformational execution which is key. And this is what makes good insurers. This is what makes insurers differentiate themselves from others. And there's 4 really key imperatives. And it's not just about knowing what the imperatives are, it's about actually delivering them and making them happen. So this is more important than even having a differentiated strategy, in my view. Firstly, increasing customer engagement. Secondly, broadening the insurance proposition. And I think we're seeing that now. We're seeing the insurers take advantage of the current situation, looking to grow more, looking to pick up where others are sitting back. Thirdly, delivering simplification, automation. I can't say that enough. They're 2 of the fundamental precepts of this. And fourthly, partnering for success. And it's more critical now than ever before. We now have the technology to do it. So just a quick touching upon those 4. The first strategic imperative, which is increasing customer engagement. This is about engaging more thoughtfully and really using big data much more cleverly. So it's about specific, relevant, and timely insights, and it's using big data to accurately predict risk in a way that doesn't come across as being too intrusive to customers. It's almost behind the scenes. Okay, in terms of broadening the insurance proposition, this is not just about writing new business and writing more business, but this is about really looking at your buyers with a comprehensive offering or set of offerings or solutions, rather than that simple, we're just going to indemnify you for loss. This is about looking much more holistically at the end-to-end pain points for your customer. And, if this could be done, for example, with, encompassing risk advice as part of the process. It could be done as contract management after a claim, helping them pursue recoveries. There's lots of different ways that you can add value and provide a more holistic offering. I think simplification, automation. Insurers have to embrace this across the whole value chain, from product to infrastructure. Increasingly, automation is about AI, but it's also just about reducing the amount of duplication and inefficient processes, and about removing spreadsheets and having a digital process. It's estimated that within the next 5 years, almost all customer service is going to be dealt with chatbots and AIs. I'm sure you're already very familiar with using chatbots. That will, right across the end-to-end offering, that will replace manual processes. And finally, ecosystem partnerships. I mentioned that very much living in an ecosystem economy. As I said, that's true, but we have a deeper, meaningful partnerships enabled by seamless API integration. So API is one of the greatest pieces of technology created, which enables this total collaboration with other partners or your work. It could be to the insurance service providers or companies completely outside of the insurance industry. So we'll have to partner far more deeply. So in conclusion, I think really there's huge challenges, there's huge risks and challenges in digital transformation, but I don't think we have a choice. I think this pandemic has taught us, it's really augmented the pace of digital transformation. And really for insurers to stay relevant and to be resilient, they need to take this path and they need to focus on how to execute this transformation, not just because it's the right thing to do or because it's shiny or because your competitors are doing it, because it's the right thing for your business. It starts with the customer, as I say. It starts with their insights. What do they value? And it ends with a full ecosystem model where you can engage and trade with partners who are going to help you go to your customer with much more insight and a much more broad, holistic value proposition. So thank you so much, everyone, for this opportunity today. Delighted to be here again. And please, look forward to any questions you might have. Thank you.
Insightful and opened my view here on digital transformation, and there is a very important underlying key that I think where most people are starting to find trouble is they're trying to transform and change 180 degrees digital, but letting go of the mainstream and just trying to get a blend and a proper mix of how to transform properly and to make it integrated, so it's a seamless transformation rather sort of than a sudden and a disruptive transformation. Before we go into question and answer, I'd just like to explain a few things to our members. Bapak Ibu sekalian, ini podcast hari ini salah satu dari rangkaian acara HUT APARI yang ke-27. Nanti hari Sabtu tanggal 19 di pukul 9 waktu Indonesia Barat, kita akan mengadakan acara baru APARI untuk mengangkat profil anggota yang ditayangkan di channel APARI podcast di YouTube dengan nama acaranya Story, cerita seputar anggota APARI, ya, dan mengangkat profil Bapak Tanto Sudiro selaku Ketua Dewan Penasehat APARI dengan judul atau temanya Lebih Ganteng dan Lucu Mana Bapak dan Anak, Tora Sudiro, ya. Bapak Ibu, make sure you tune in on Saturday tanggal 19 September jam 9-nya. Ini pasti menarik. Oke. Jadi jangan lupa ya, hari Sabtu ada acara Story di channel APARI YouTube. Kemudian di tanggal 24 September mendatang juga jam 9 sampai 12 waktu Indonesia Barat, HUT APARI via daring juga akan meningkatkan tema kualitas dan integritas sebagai ahli pialang asuransi dan reasuransi. Dan ada narasumber dari tokoh nasional sekaligus wisuda via daring dan untuk tingkat APAI dan sertifikasi CIIB. Jadi tanggal 24 ada lagi acara APARI online. Bapak Ibu stay tuned, jangan lupa juga biar nggak ketinggalan acaranya, subscribe ke APARI Podcast di YouTube, like dan klik loncengnya dan share kepada teman-teman yang lain, Bapak Ibu sekalian. Jangan lupa ya, kita share, subscribe dan like APARI Podcast. Terima kasih. Alright, Bapak Ibu sekalian, tadi kita sudah mendengarkan 3 narasumber dari international partnersnya APARI, ya, dari Anzif, dari Lloyds, dan terakhir dari DXC Technology. Kalau saya bisa merangkum menyimpulkan, dan kita sudah ada beberapa pertanyaan masuk lewat chat kita, bahwa dari sudut Anzif, kita harus menggabungkan kualitas dan sumber daya HR kita, sumber daya manusia kita untuk bisa menggarap teknologi dan improvement, kemudian juga bagaimana kita bisa meningkatkan kapabilitas dan kompetensi, ya, harus juga meningkatkan integritas untuk melayankan seluruh insan yang berbau di industri insurance ya. Kemudian kalau kita lihat dari Lloyds menyampaikan bahwa dalam pandemi ini juga asuransi punya peran besar untuk mengkontribusi economic recovery, di mana perannya pemerintah, perannya bagaimana ada dana-dana bantuan dan juga support dari capital markets untuk inject capital kepada sektor-sektor tertentu dan memberikan support capacity untuk risk yang perlu kita sampaikan coverage dan penutupannya. Menarik juga kalau kita lihat dari digital transformasi tadi yang disampaikan oleh Ken Chaplin, bahwa sekarang bisnis asuransi ini sudah bukan lagi business as usual. Tidak kita bisa terapkan atau kita lanjut dengan yang sudah-sudah, dengan metode yang sudah-sudah, tapi kita harus lihat ke depan dengan new inovasi. Transformasi digital ini akan meningkatkan pelayanan service delivery tentunya, karena kedepannya consumer atau pelanggan atau nasabah asuransi akan lebih personalized approach. Banking saja sudah online, pembelian consumer goods sudah bisa banyak online, asuransi pun akan lebih banyak online ke depannya. Innovative proses ini akan meningkatkan improvement dan efisiensi dan akan redefine value proposition buat semua players dan stakeholders di insurance. Oleh karena itu saya buka kesempatan kepada Bapak Ibu yang sudah bertanya atau ingin bertanya. Kita ada satu pertanyaan nih. So ladies and gentlemen, Prue, Pavlos and Kent, we already have some questions already coming through our chat room. The first one is not a question, but more of a comment from Mrs. Arianti. This is a comment for Prue, and Mrs. Arianti has said, we are holding much hope for ANZIIF and APARI to continue to develop competencies for insurance professionals in Indonesia. Thank you to Mrs. Prue Wilsford for sharing today and supporting ANZIIF through education of insurance in Indonesia. Warm regards from Arianti.
Thank you, Ibu Arianti. It will be lovely to come and see you again, hopefully next year. It is wonderful to collaborate with so many leading organisations in Indonesia who are all focused on increasing professionalism in insurance. Please do stay well.
Thank you, Prue. We have a question here from Mr. Bambang Suseno as the chairman of APARI here. I think the first question is to Prue. Due to the COVID-19 global pandemic, is there any new learning method provided by ANZIIF for ease of members, training participants, and is there any new subject matter in the education syllabus to allow members to keep catching up with current dynamics and the future?
Yeah, thank you, Bambang. We have really focused on high-end technical webinars, and of course, you know, as with today, the ability to bring leading thinkers from around the world and around the region has been a real core strength of our collaboration across the world. So in terms of the topical learning, you know, continuous professional development, our webinars have been very successful and, as I said, very focused on technical learning. But also in terms of our underlying training, you know, we've also had to innovate and really focus on new methods for examinations to ensure that there is still integrity in the processes through online exams. And one of the really pleasing things is that we've seen an increase in uptake of online learning across Asia. So traditionally in Asia, there has been a strong focus on face-to-face education, and there are many strengths of face-to-face education. But online learning is also an excellent way of learning and allows exploration of ideas in different ways. Video is in fact one of the fastest growing educational tools globally. And so being able to incorporate video and real life experience into online learning has been something that ANZIIF has really focused on. So we are continuing to develop new training modules that respond to the new world, and particularly focused on conduct and culture, building integrity, and also the foundations of general insurance so that we can bring more people into our industry. So probably two parts, our webinar program and high-end technical learning, but also focusing on the new skills that we're going to need in the new world.
Thank you, Prue. The next question is for Pavlos. What are the interesting things as the result of Lloyd's Lab for non-COVID-19 related? And what is the philosophy of LMA 5393, communicable diseases clause, to be imposed in the policy?
Thank you very much for the question. So I think I'll start off with the second one, which I know is of interest to the market in Indonesia. So following COVID-19, a number of our syndicates are reviewing their policy wordings and risk appetites, and a number of syndicates are now choosing to include communicable disease endorsements or exclusions for certain lines of business. So, in some cases, syndicates are using the recently published LMA wordings, in some cases, the International Underwriting Association wordings, but there are also a number of other alternative similar broker wordings in use as well. So I think the first thing to highlight here is it's a commercial decision for each syndicate that dictates the coverage they're willing to offer, and therefore whether or not they use any of these wordings. I think you've seen potentially in the insurance press that there was a ruling in the UK courts 2 days ago on basically on certain wordings and whether they did offer business interruption cover or not to clients. So I think what we're seeing right now, the philosophy is that insurers want to be very clear about where communicable disease coverage applies and where it does not. I think they want to remove all ambiguity. And I think this is something that we need to act on as the industry, including the brokers and underwriters. We need to be very clear with our clients about the coverage they're getting, but also we need to demonstrate the value of our products, I think. And I think perhaps in the past we weren't as successful as we should have been in terms of articulating the value of the product we're selling and communicating that to the client effectively. I think COVID-19, as is the case with many crises, has really raised awareness of the power of insurance and what it should be doing. And I think we need to take advantage of that now and use this as an opportunity to educate our clients on what coverage is out there. I know it's going to be difficult securing communicable disease coverage going forward, and that's why, that's the very essence, I guess, of my presentation today. We are aware of that. We want to be there for our clients, and we need to come up with solutions as an industry. So that's what Lloyd's wants to focus on going forward. In terms of the Lloyd's Lab more generally, so there's all kinds of different solutions that have been looked at under the Lloyd's Lab. A lot of them are technology focused. How can we make it easier for clients to access our products? How we can use better data and how we can use data to produce better modeling. At the very moment, the current cohort of the Lloyd's Lab is very, very much focused on COVID-19 and pandemic/systemic risk solutions. So what I would propose is going on Lloyds.com again, and I can share a link, and you can see in detail the different cohorts and the different companies within those cohorts and what solutions they're currently working on.
Thank you, Pavlos, for your answer there. Hopefully that answers the questions from Pak Bambang. This question is for Kent. How extensive is digital or technology driving the way that DXC and other insurers or reinsurers do their business? And how will it look in the next 5 years?
Sorry, sorry, I missed part of that question. How
extensive will digital or technology drive the way that DXC and other insurers or reinsurers do their business, and how will it look in the next 5 years?
Okay, thanks for the question. Just at the outset, let me just clarify. DXC's, we're not an insurer. We're a technology company. So we're the largest independent tech company in the world. We were created 3 or 4 years ago out of the merger between CSC, which you may be familiar with, and Hewlett Packard Enterprise Services. So our legacy, the CSC side of the business, we are the largest insurance platform product company probably in the world today. So we provide technology for insurers and brokers. We're one of the largest broker software companies as well, and reinsurers, of course. So yeah, I mean, it's my job to to sell digital transformation. So it's very important to us and very important to our customers. But yeah, so I think I don't have any stats or forecasts around how many people are going to take it up or how important it is. But I can probably talk just anecdotally and well, factually that digital transformation was already the clarion call or the call of the day before COVID. Yeah, COVID has not created this desire or awareness or need for digital transformation. I think it's just been a really amazing accelerant, and it's been just so visceral and globally aware, right? But digital transformation has been top of mind and top of insurers' radars for a number of years. The key is how to then execute, how to then turn that into real business outcomes, which I keep going back to. It's not about tech for tech's sake. It's about producing real outcomes for your business and for your customers. But but over the next 5 years, which was the question, it'll accelerate phenomenally. The approaches we've had not in recent years is exponentially larger than previously. So people are in a hurry, insurers are in a hurry, and reinsurers are in a hurry. And it's our job to serve them. So I don't have a number, I'm afraid, but the world's in a hurry when it comes to digital transformation.
Look, if I may build on Kent's answer, I'm lucky enough to sit on the advisory group for InsurTech Australia. And, I think Kent's comments are accurate. It's an area that's been a great focus and increasing investment. And there are a lot of really talented people who are busy solving parts of the customer pain points or data pain points across our industry. If you step outside and look at the customer, insurance traditionally has probably not been as transparent as it should be. So the customer experience that people expect isn't about insurance. They don't compare insurers. They compare us to all their other shopping experiences that they have. They compare us to shopping on Amazon, to any service that they use. And so when it comes to insurance, the legacy system issues that Kent has talked about have really prevented us improving the customer experience, and in particular the transparency. And we do know, particularly building on the Hayne Royal Commission, that transparency is a critical element of building trust. If customers can't understand the product that they have, if they don't think it's relevant to them because they don't understand the cover that they've got, then we are going to have a problem over time. And if we don't face into that, and technology is a huge part of that solution, then actually we will find that we don't build trust and we don't actually help our economies grow. So whilst, like Kent, I would say I don't actually have a number, I do know that it is a critical part of our future and that there's a lot of clever people doing a lot of clever things. And I would encourage that focus on collaboration. You look at Deloitte's presentation, and one of its great strengths is about how it's collaborating across industry, across the community, and across government to find creative solutions to the current problems. And similarly with InsurTech, I think the big challenge has been collaboration. Traditional insurers have not actually been strong in collaborating with outside technology companies, and that's been probably a really big change. And so building that 21st century skill set around collaboration is going to be a key to building that digital future.
Okay. Thank you, Prue and Kent, for answering the question. So in other words, what you're saying is, especially this is for Kent, for those companies, whether you're a broker or insurance company, that haven't started to make the shift to a digital platform or digital technology, they're going to get more left further behind, and they'll be lost if in the next, say, 6 to 12 months they don't start to make the transition. Would that be correct, Kent?
Yeah, I mean, I think so. Yeah, I think that's a fair comment. And I think that's where perhaps not only vendors like me, because I'm going to come from a slightly, service provider perspective, but that's where perhaps as an industry we can collaborate. A great organization like Apari can help insurers and brokers like that within your community to get access to expertise and get access to people who can help them form strategies around it. Because as I said earlier, whilst it is an imperative, you know, we don't want, you need to really think these things through and not rush into them. You need to really think about that, the end-to-end process and all the implications that come out of it, including the culture. But yeah, I certainly think there's a really good role for APARI in that and helping its community and folks like us and my competitors and my collaborators around a table to really start to map that out for you. I mean, it'll be you know, our pleasure.
Thank you, Ken. Jadi Bapak Ibu, saya ngerangkum beberapa jawaban dari Kent, Pavlos, dan juga dari Pru bahwa kedepannya memang kolaborasi antara SDM profesional dan juga teknologi yang akan menjadi bagian dari DNA kita sehari-harinya kedepannya, bahwa industri perasuransian tidak akan lepas dari inovasi teknologi. Kita harus mulai terus-menerus menggunakan inovasi teknologi untuk mempercepat. Karena ada satu poin penting yang disampaikan Pru tadi adalah isu mengenai transparansi. Mungkin dengan adanya digitalisasi yang lebih bagus lagi, consumer akan lebih nyaman karena semua akan transparan, semua akan lebih kelihatan di public domain, dan engagementnya pun akan lebih cepat karena kita tidak perlu mungkin berjalan untuk ketemu face to face, tapi sekarang dengan online teknologi, dengan menggunakan video calling, dengan streaming, kita bisa lebih touch point dengan customer, bisa ketemu. Selanjutnya ini ada pertanyaan lagi dari Bapak Mahdeni Zulkarnain ya kayaknya nih. Pak Denny dari Intercoastal. So I have a question here. This is a question for Kent again. So Kent, you're very popular this afternoon. From Denny of Intercoastal, he asks, I'm sorry if this seems basic, but we could see how a digital transformation could be implemented and to benefit an insurance company from your presentation. But Intercoastal as brokers are more engaged with the corporate instead of the retail customers. So how would you pitch this digital transformation to a small to medium insurance broker like ourselves?
That's an excellent question, and thank you very much, Coastal, for reminding me about the very commercial nature of this community. The principles are exactly the same with your customers. You know, a personal lines customer or commercial customer. It's about that ecosystem, and your commercial customers are looking for exactly the same sorts of things, the same sort of experience. I mentioned earlier about the idea of an omni-channel. So omni-channel is excuse the word, it's a very technical word, but it means effectively a digital experience or front end, which is personal to you, right? So every customer of yours is going to have a different perspective on how they want to be treated, on what they want to see, on how they want to engage with you as a broker or as an insurer. So a good example would be a portal, as a broker, having a portal for your commercial customers and SME customers to be able to trade with you quickly, transparently, with immediacy, you know, in real time, with real data and real access to products and get things done quickly. So you can move, and we do a lot of broker enterprise globally. We do a lot of digital transformation for brokers, and them it's very much around the customer experience. It's very much around creating these portals where businesses traded so cheaply and transactions can happen so quickly without all that human interaction. And then you can really concentrate on the human interaction where it's needed, right? On the more complex specialist stuff where you need to negotiate, you need to look at terms and conditions, you know, you might need to adjust claims and things like that. But for the majority of the quote bind, you know, from the quote bind system, it can all be done on a portal, all be done electronically. So it's a very good question, and I should have focused more on the commercial angle, but I think the principles are exactly the same, even if the solution could be slightly different. I hope that makes sense.
Okay, thank you, Kent. The next couple of questions are more related to market and pricing, so I think this is directed to Pavlos, if I may say so. First of all, there's issues on potential increases in premium in the market. This question is from Mr. Ian Ramalan. So, does Lloyd's understand or familiar with the capabilities of the Indonesian market, the buying power of local corporates or local SMEs here in Indonesia, and are the price increases going to be made in a way that it will fit to the buying capacity of the local market? And also from Mr. Amanda Stanley regarding capacity here. How do you see Lloyd's or other insurers and even perhaps market players supporting the national capacity for Indonesia if we need to build up capacity or there's concern about inefficient capacities for the Indonesian market? So Pavlos, please.
Thank you very much. And Ken, please dive in. You'll have views as well from your back. You can answer difficult questions. You're a claims man.
I'm glad you got the question, not me.
So I think on the first point around capacity, the answer is absolutely. I think the role Lloyd's plays, the role the international reinsurance industry plays, is to provide capacity to markets. We don't like competing directly in markets. We like being complementary to markets, helping provide product and capacity. So absolutely, we're very keen to see that. Lloyd's always speaks about free access, open markets, the ability to provide coverage to open markets. We have Kent in New Zealand right now. We know from our experience, countries like New Zealand seek capacity from foreign markets because they know they have heavy catastrophe exposure and they know they need that capacity to operate effectively. So absolutely, we're very much there. We just need, I think, to make sure we have the right access. And I think the more we see progress in things like ASEAN liberalization that will allow Lloyd's Asia to provide more access to Indonesia, the more we see relaxations in barriers to reinsurance, I think it'll be to the benefit of markets like Indonesia. So from that macro perspective, absolutely, that's what we're here to do. I think on the pricing point, it's more complicated. We fully understand that customers are going through a very, very difficult time right now. This is an absolutely huge crisis that struck around the world, and it is going to be a challenge for businesses to find effectively find the money to buy all the insurance that they might have previously bought or they need going forward. But I think this is the point that we need to focus on. It isn't the increase in premium. We need to focus on what you're getting for that premium. And I think that's where brokers have a very, very important role to play, because we're not providing we're not here to provide the cheapest. We're here to provide the best product, right? So it's not about the price. It's what you're getting for the price of the product. And this is what COVID-19 has shown. I'll give you a very good example. Wimbledon, the tennis championship, they were very publicly celebrating the fact that they had paid the money to buy event cancellation insurance. And they reaped the benefits. When COVID-19 struck, they got their payout. Now Wimbledon have decided not to purchase reinsurance for the next, I think the next season, because they think it's unlikely they'll actually be able to progress with their tournament. They're able to plan on that basis. So I think if you looked at the cost of Wimbledon's insurance product, it was pretty high, but if you look at the amount of claims they received, it was way higher. so that's our product, and that's what we need to be selling. We need to be selling the value of the product, not the cost of the product. But again, I do absolutely appreciate and I sympathize with the situation that risk managers are going through. I think we're responsible as an industry. I think insurers and I think brokers competed on that too much in the past 10 years in particular, and we've seen rates being driven down all over the world to unsustainable levels. It became unsustainable for the insurance industry. And unfortunately, COVID-19 has struck at a time, unfortunately for the consumer perhaps and customers who'd been enjoying these fantastic deals. COVID-19 struck at a time when the market is beginning to turn internationally as well. So I understand that, but at the end of the day, you need to have sufficient pricing against the risk in order to be able to have a sustainable insurance industry. And ultimately, that's the benefit of consumers and the companies buying insurance, because if we can't, we can't charge the right money for the risk, then you won't have a sustainable insurance industry. And actually, Kent's statistic earlier on that only 20% of insurance companies are generating profits, actually pretty shocking. There's something wrong there. And a lot of it can be fixed by digital transformation, but there must be a pricing issue in there for that to be happening as well.
Okay. Thank you, Pavlos. Just to add from my perspective here, to add on to the questions from Amanda Stanley and Ian Ramalan, if the market was to increase in terms of price, is that directly an impact of the losses related to COVID-19 indirect claims as a result of the pandemic, or is it because capital providers or the insurers that are in the market now looking at this digital transformation, hence the increased investment capital to transform, with the long-term vision that yes, we are going to achieve efficiencies in productivity and sales and coverage by not having so much manual processes but automation? Or is it just purely risk-related pricing that's gone up that you envisage? I mean, this is not just to Pavlos, but perhaps to Kent and even Prue, from what you've seen possibly in the Australian markets as well.
Yeah, I mean, I'll kick off and hand over to Kent because and Prue, because they'll have their own views, and Kent will have a lot of experience in this because of his background in claims. But it's a bit of both. Companies will be investing in digital transformation, but actually, the cost of that is arguably quite small compared to the potential losses if you underprice risk. And I guess what we need to appreciate is that insurers, and particularly the international insurance and reinsurance industry, won't necessarily be looking at individual domestic markets and pricing accordingly. They'll be looking at the price of risk globally. And at the moment, we're seeing significant increase in rates because of lack of availability of coverage in markets like North America, Australia, Europe. So as a result, insurers are seeing rate increases over there. So when capital's considering where they want to put their money at risk, they'll look to do so where they'll get adequate pricing. And if the pricing isn't adequate in certain markets in this region, for example, the capacity willing to accept risk from those markets will naturally decrease. So I think it's only a natural thing to see an increase in rating in this region as well. And I think it's for the benefit of the overall industry and the whole insurance ecosystem, because we need to have sustainable pricing to ensure a healthy insurance market going forward.
Thanks, Pavlos. Any comments from Kent or Prue on this?
Yeah, I think just a real quick one, fully support Pavlos's comments. Just a couple of just to add really that, insurers, brokers, reinsurers have been looking at their investments around digital transformation for many years, and it's not risk specific. Yeah, so they don't. When a board or a business looks at the cost at price of investment, it's taking a long-term view, and it's looking more at its operating costs or capital rather than looking at its combined ratio from a pricing perspective. If rates have to go up because of losses or because of market change and events, that's not going to really impact their digital transformation strategy. In fact, even pre, we've had 4 years now, I think 4 years of attritional losses and cat loss have been greater than capital. So the industry has been struggling for many years because of inadequate pricing, but also, in fairness, because of high management expense, 40%. So 40% that Lloyd's underwrote was being spent on management expenses and acquisition costs. So it's not just about, one thing like digital transformation is certainly not why the prices are going up. And even in tough times, businesses are transforming because digital transformation is, yes, it has to be paid for, but it the key is it reduces that 40% that I just mentioned, right? So operating costs are high, far too high, and digital transformation reduces that 40%, can reduce it quite significantly. So in fact, insurers, my argument would be insurers who digitally transform and execute well will be able to have more competitive pricing because they'll have a better combined ratio.
Great, thank you, Kent. Anything to add, Prue?
Oh, look, I think Pavlos has covered the technical very well, and I agree completely with Kent about capital investment actually having a net present value that is tangible. The only other thing I'd add is, the massive impact of climate change. You look in Indonesia, in Australia, in New Zealand, at the very, very significant catastrophe seasons we've had. This is quite separate from COVID and quite separate from any other capital investments. This is a new normal. The California bushfires are again very similar. And whilst I agree that many of the international players do look at global risk pricing, they are increasingly for catastrophe risk actually rating countries. So for countries such as Indonesia and Australia and New Zealand, this is an ongoing challenge in our risk pricing.
Okay. Thank you, Prue. Okay, allow me just to summarize and to translate bahasa. Jadi Bapak Ibu, yang tadi disampaikan oleh para pembicara kita hari ini bahwa memang kenaikan harga suku premi ini di market akan naik dan kelihatannya bakal naik, tapi nggak selalu berhubungan dengan risk yang ada. Memang kenaikan premi juga memang berdampak dari beberapa katastrofi yang pernah terjadi sebelum COVID. Kita lihat banyak bencana alam, kebakaran hutan di California, di Amerika Serikat, dan juga bencana alam di Australia juga terjadi tahun lalu. Dan di Indonesia pun kayak tsunami, gempa bumi juga banyak sekali yang berdampak kepada market menjadi makin restricted dan capacity pun menjadi tough. Namun demikian, karena adanya COVID dengan diperlukannya digitalisasi atau transformasi teknologi, maka investasi capital sangat besar bagi perusahaan asuransi untuk meningkatkan kualitas IT atau platform yang digunakan untuk melayani semua stakeholders, customer, broker, dan partners lainnya, sehingga capital investment ini yang dibutuhkan nantinya untuk meningkatkan efisiensi. Mungkin beberapa tahun ke depan efisiensi ini akan terasa dari sisi profitability buat teman-teman di intermediary ataupun di industri, karena percepatan waktu akan membantu penghematan dari sisi operasional dan timing. Oke, Bapak Ibu, ada pertanyaan lagi yang mau disampaikan lewat chat group? Kalau tidak ada, karena waktunya pun kita sudah nyaris habis, to Prue and Pavlos and Kent, since there are no further questions and we've come to the end of our broadcast today, I'd like to ask you for closing comments and any personal messages, especially for APARI, for our 27th anniversary. I will start with you, Prue.
It is such an honour to be here with our great friend at APARI. You have done so much in your short time as an association, but particularly over the last 5 years, you have really driven professionalism, and that focus, I think, will stand the entire Indonesian community and economy in very good stead. One of the things I've loved is you've continued to innovate all sorts of ways, and I love seeing that. So my words of encouragement are to keep innovating, because that is the way that you will continue to grow your community. We love being a small part of that, and happy birthday and terima kasih. Thank you.
Terima kasih, Prue. Pavlos, over to you.
Thank you very much, Ricky. So once again, just to congratulate you, the APARI board, and all your members in Indonesia. I think I'm always so impressed with how committed the Indonesian broking community is towards continuous learning, and how enthusiastic they are, and I think how cohesive you are as a community. I think way more so than any other broking community I've come across, in Asia or Europe, indeed. So congratulations on that, and keep up the great work. I think you're really driving forward standards and development of the Indonesian industry. And on behalf of Lloyds, we look forward to continue working with you and developing our fantastic relationship. So I hope everyone's keeping safe, and hopefully we'll get to see you all in person again very soon.
Thank you, Pavlos. Okay, and last but not least, Kent.
Thank you, Ricky and Chairman Bambang. Prue and Pavlos have said it all, really, perfectly, absolutely perfectly, as I would expect. I do recall one senior Silicon Valley investor who did say, and he was investing significantly in Jakarta, saying that Jakarta was going to be the Silicon Valley of Asia.
Wow.
So I hope that's happening. And I know the insurtech industry is very vibrant in Indonesia. So I think the role you play, Ricky, and your association is fantastic. And to see this kind of, this real unification and camaraderie and continuous, and just huge membership. I mean, it's remarkable, and it bodes really, really well for the future. So I've got every confidence that the new world, Indonesia will be a very, very big part of it from an insurance perspective. And in terms of digital transformation, DXC, we'd love to be part of that. We'd love to be part of your journey. love to help you and help your community, help you prosper. So many thanks again, and yeah, stay well.
Thank you, Kent. Thank you to everybody, to Prue, Pavlos, and Kent for your kind words. And wow, that's certainly a nice statement to hear that Indonesia or Jakarta could be the next Silicon Valley. So to all Indonesian insurance professionals, keep your eyes and ears open. That might happen. Nothing is impossible. So final words from me. Terima kasih kepada Bapak Ibu semua yang telah bergabung dalam podcast Apari hari ini dalam rangkaian acara HUT Apari ke-27. Terima kasih banyak ke seluruh kerabat kerja dari Apari yang telah bertugas hari ini, kepada Bapak Suseno selaku Ketua Umum Apari dan seluruh jajaran DPP. Terima kasih atas kepercayaannya kepada saya selaku host dan moderator. Kepada Bapak Ibu yang telah menyampaikan pertanyaannya, terima kasih. Stay tuned for the next event for Apari hari Sabtu. Tanggal 19 ini ada acara yang menarik di Apari Podcast. Jangan lupa untuk subscribe, join, klik belnya dan share. Dan dari saya, apabila ada kekurangan atau salah kata, mohon maaf. Terima kasih, tetap semangat, stay safe, stay healthy, stay positive. Wassalamualaikum warahmatullahi wabarakatuh.